Hi folks, it's Steve at the Forex Codes. We're on to Money Making Indicators 3, the TFC Trix. If you trade against the tricks, you're going to lose money. Let me show you how. The Trix indicator was developed in the early 1980s, so not really that long ago, by Jack Hudson, who was at the time an editor for the Technical Analysis of Stock and Commodities magazine. Totally useless piece of information, but let's do a bit of history. And the name Trix is comprised, really, of its calculation. Triple exponential, hence Trix. Yeah? So obvious. The Trix is calculated using, now we're going under the hood here, or under the bonnet, as the Brits say, under the hood, as the Americans say. The Trix is calculated using the triple smoothing of price, and therefore it's generally trend following. So this is a trend follow, again, like the cloud, like the TFC candles and wave, we're trend following. Part of the confluence. Get 3 or 4 of these things in confluence, in agreement, and we know the trend. If you're trading against the direction that the Trix is moving, you are trading against the trend and you will likely lose money. I think I might add that in. So I'm going to say that again because it's important. If you're trading against the trend, against the direction the Trix is moving, you're trading against the trend. So the Trix is red and you're trading long, you're asking for trouble. Maybe 2 times out of 10 you'll get away with it, but in general you're asking for trouble. Just like any other filter that smooths random noise out of the market movement, the Trix has a time lag. But I will say the Trix has the shortest time lag that I've seen in any indicators, whether it's MACD, RSI, CCI, all this useless stuff. The Trix has the shortest time lag. And again, for those that want to know the technical aspects of this, it displays the percentage rate of change of a triple exponentially smooth moving average of the currency pair's closing price. So we're using closing price, and it's the percent rate of change of triple, hence the word Trix, triple exponentially smooth moving average. If you know, for the nerds who are watching this and the techies, just go online and you'll get, there's a calculation there, which I am not going to put into this presentation, thank you. I'm more interested in how to use it and how to make money from it, not what the equation is. Now the advantage of an exponential filter over a simple linear weighted moving average is that the lag, the time lag, is relatively short. The Trix is the heart of the system and shows us early possible trend changes on a cross of the faster Trix to the slower Trix line, as you will see in some examples. Now divergences, and I'll explain it, but when I show you a chart you'll see it better, between the price and the Trix can indicate significant turning points in the market. Not every time. Only there needs to be support and resistance there anyway, but the divergence between the price and the Trix can indicate turning points in the market, as I'll show you. The TFC Trix is certainly one of the best trend reversal and momentum indicators we have in our daily arsenal. The strategy basically uses the TFC Trix and the Ichimoku cloud. See, is it part 2? Part 2 for the TFC cloud, with higher time frame participation. So we're using the Trix and the TFC cloud and looking at higher time frames. And that's the way the strategy works, as you will see later in this presentation. So when the TFC Trix and the TFC Cloud are in unison on a multiple of time frames, it's time to pull the trigger. Okay? We've got an example coming up. Now, I'll go straight to the example and then I'll explain it from there. But you've also got an explanation on this slide. For those that want the slides, you'll be able to get them. But very quickly, in this example, the price is in an uptrend and you see a shooting star. Price struggles to go higher. And then the Trix goes red. Well, let me show you. Let's talk about it. So price has been in an uptrend here, and look at the shooting star. Not a perfect one, because I'd like this to be shorter, this part here. I'd like to be shorter. I've forgotten its name now. Anyway. But price struggles to go higher to get back to those highs. And you can see why. The Trix is red. During all this time, price is trying to go higher. The Trix is red. Both Trixes are red. And they start going through zero. The fast Trix, by the way, is the thick line. Starts to go through zero. And then price falls through the wave and goes red. The candles go red as price goes below zero. And you can take a trade there. Okay? You can take a short there. We get the pullback. For those like me who like to wait for a pullback first, we get the pullback, and as you can see, the Trix rolls over first. And as the Trix rolls over, price starts to fall. Candles go red again when they go through the TFC wave and candle. And as the slow Trix goes through zero, and the other Trix, as the fast Trix goes through zero, and the slow Trix is red as well, you can go short there. Okay? And you got a good trade, and as it falls. Now, I talked to you before about divergence. You can see here, price is falling, albeit a lot slower. Look, price is falling, so price is falling a bit slower, but at the same time the Trix is green and rising. There's divergence. Price falling, Trix rising. Can you see? It's indicating a bottom. It's indicating a divergence between price, which is falling albeit slower, and Trix, which is rising. That is a sign to get the hell out of that trade. Okay? If you're watching price action, price does go back to the wave, but look at the outside bar there, the engulfing candle, and price drops a bit further. But the Trix is telling you to get out. Okay, I hope that's clear. This is example 2, and we've got an uptrend on the euro pound. You can see here the Trix, both Trixes go green, and the fast Trix goes up through zero. In fact, they both do. Excuse me. TFC wave is turning to the upside. Candles are green, light green. You can go along there. Now, don't forget, I have other confirming indicators like TFC cloud. Yeah? TFC squeeze. These are not on here yet. We're just using these, but we can trade from these. So, up it goes, and then it pulls back to the wave, correct? But even before price starts to pull back to the wave, your fast Trix has already gone red, indicating price is going to slow down and is coming to a stop. That cycle, that wave is coming to a stop because the TFC Trix has gone red even while that's still rising a bit. It's signaling you're going to get a pullback. So you could get out and re-enter, or you just get ready for the pullback. And you get the pullback, and price tries to go higher, just gets to the almost like a double top there. But the Trixes are still red, so nothing's going on while the Trixes are still red. And price pulls right back to the bottom of the wave and finds support. Here, look. Right? So Trixes are red, don't go long. The Trixes go green again, the fast Trix goes through zero. Price has bounced off support. You've got light green on there at 0.2. You go long again. You're going long. Price reaches yesterday's high, the thick yellow line there, yesterday's high. Get out there. Even before then, the thick line, the fast Trix, has already started going red and turning down, even before it hits yesterday's high. So there's your sign again that price might be pulling back to the wave, and the Trix has given you that information. Point 3, price pulls back to the wave, and they get a fantastic long candle there. Shortly afterwards, your fast Trix goes green again. Now, if you go long there, it's aggressive. You can do, but it's just purely on price action, because it's bounced off the wave and up it goes again. But if you do go long there, you're going long before the fast Trix has gone through zero. So conservative fast Trix go through zero, aggressive there. Now, it goes above yesterday's high and then retests it, see? But it's not going any higher because the Trix, both Trixes are red. So both Trixes are red and falling. This price ain't going any higher. Can you see the connection there? So we get to point 4 when we're on the wave again, and we've got loads of support here, and then both Trixes go green and the fast Trix goes through zero. You get a good green candle, light green, off the wave, go long again. Yeah? And you're going with the trend, and the Trix is telling you when the trend's likely to change and come back to the wave. Pullbacks, pullbacks, pullbacks. And the Trix gives advance warning of the pullbacks. Look, even as the price is rising to its crescendo there, the Trix is telling you we may be getting a pullback here, right? So the best signals are when both TFC Trixes are green and at least one of them is above zero. Like here, 0.4, 0.2, 0.1. 0.3 was more aggressive because the TFC fast hadn't gone through zero yet. Interesting stuff, isn't it? Money making stuff. Not just because you can get into trades at the right time, but you've got clear indications, like here, when the pullback's coming, because the Trix goes red, and when they both go red, it is pointless hanging on to a trade unless you're going to wait for it to come back to the wave and then go again. I like to take my money and then go in again on the bounces off the wave, on the pullbacks, you know. Okay, as mentioned above, one strategy that we uses the TFC Trix and the TFC Cloud with higher time frame participation, especially on the TFC Cloud. So let's look at example 1 using the Cloud and the Trix on the pound dollar 15-minute chart. Now here, by the way, it's not a fantastic picture, this, I have to say, but let's persevere with it. The trend has been going up, then it went sideways. This yellow line is yesterday's high, and price hits it and doesn't go through it. Price tries again at 0.1, doesn't go through it. So it's failing, price is failing at yesterday's high. That's the first clue. And then we get a 1, 2, 3 pattern. You know, I love these for changes in trend. You've seen this on my other videos. At point 2, the support for 4 hours here. See the support? So you get a 1, 2, 3 down. But I'm not going short here because firstly, both the fast Trix is green, so I'm not going to go short. And the slow Trix is also green, and it stays green right up to that point. So I'm not taking the short yet because the Trix is against me. It's green. Not only that, here the final cloud is not red. All 4 have to be red. So I've got the cloud telling me not to go short. I've got the Trix telling me not to go short. So I don't go short, and we've got support as well. This support has to be broken, and it gets broken here. And at that time, all 4 TFC clouds are red. Both Trixes are red, and the fast Trix has gone through 0. Support's been broken. So you've an excellent chance that prices are going to continue falling because of all this going red. And prices do fall. And they fall to this yellow line, which is yesterday's low. I always have these levels on my charts. Yesterday's high, yesterday's low, because they act as support and resistance. So I'm going to get out at yesterday's low anyway, because it's support. But watch, we talk about divergence. Price is falling, although the rate of fall is lower now. But price is falling, but the Trix is rising and green. Divergence again. Look at it again. Price is falling, candles are red, but Trix is rising and green, which tells me to get out. Well, I've got support anyway, but support is likely to hold because the Trix is going higher and is green, so I'm out. Does that make sense? But you know, that trade is worth up to 80 pips. Okay, next example using the Trix and the cloud. Example 2. Dollar card, 30-minute this time. Don't forget, we don't have to use shorter time frames all the time. You can use any time frame for this. Now the pair is in a sideways trend because all the you've got 3 o'clock angle on the TFC wave. The TFC candles are mostly blue. So we've got a sideways trend. But that sideways trend changes at the London Open when we get a light green candle there and a light green candle there, larger candles, and the wave is starting to move up. At the same time, all TFC clouds go green. Both Trixes are green, and the fast Trix crosses through 0. There's your signal to go long. And follow it up, and it reaches yesterday's high. Again, the thick yellow line is yesterday's high, and I'm out there, 30, 35 pips out, because I want to see if yesterday's high is going to hold. We get a pull back to the wave, and you can see that through the both Trixes going red again. Pull back to the wave, and this support holds on the wave. Yep, for quite a long time. These are half-hour candles, so you've got an hour, 2 hour, 3 hour, 4 hour, 5 hour, 6 hour, 7 hour. Oh my word. Almost a trading day. But then, both Trixes go green and above 0. The fast Trix goes above 0. All 4 TFCs are green. You got light green candles forming and rising. You can go along anywhere here. Again, you can go along to here, which is still a good trade, or if you're brave enough, it breaks through yesterday's high and you're out further up. Yep. Why do we think it's going to break through yesterday's high? Because although it's not shown on here, the average daily range, the ADR, was low. The range for that day was low, so it's got more range to go. So it's likely to go through, and up it went. Okay. Same strategy 4 green clouds, both Trix is green, fast Trix going through zero, your wave and your light green candles, and that's on a 30-minute time frame. What I'm going to do now is what I always do. We're going to go live to the charts. I haven't got a clue what's going on with the charts at the moment. We'll go live and look at some of these Trixes and clouds, TFC Trixes, TF clouds, and how they mix together. I'm going to alter my chart so I don't have my other indicators on, most of them anyway. I'm not going to have the volume, and I'm not going to have the squeeze on there. And let's have a look at some live examples. Right, this is CAD Yen 15 minute. Right, you can see here TFC wave is flat, all the candles are blue. Sideways trend, nothing doing. Okay, this thick yellow line is yesterday's low. Okay, D1 bottom. You can see that the Trix is gradually going lower and lower, and there both Trixes are red and going below zero. So what we're doing is we're waiting to see if yesterday's low gets broken, and it does. It gets broken and retested here. So I'm looking for a short, and as you can see, anywhere here, all TFC clouds are red. The TFC Trixes have crossed and are below zero. Price is below the wave, candles are red, and we've broken yesterday's low. And that's a short trade. Textbook. The best you'd have got is 39 pips. Whether you stay that long, I don't know. But that is textbook trading. This is the Aussie CAD 5 minutes during the Asian session last night. See, price is just edging higher and hits yesterday's high. How many times have we seen this? Hits yesterday's high, and you've got a sort of a pin bar off that. So it fails at yesterday's high, and at the same time both Trixes are red and falling. Correct? So price begins to fall, as you would expect, because the Trixes are falling, and you get a 1, 2, 3 pull back to the wave. I'm looking for shorts now to pull back to the wave, and it's pretty straightforward. Fine when the Trix goes there. So the break of there, all 4 TFC clouds red, your Trixes are red and below zero. So you've got a nice little trade down here on the 5 minute. That's good. No problem with that at all. Euro CAD 15 minutes today. Now we're sideways here because it's having problems getting through yesterday's high. See it? But it does get through yesterday's high and retests and goes above again, light green candle. There. At that time, all 4 TFC clouds are green, both Trixes are green, and both rising through zero. It's cleared yesterday's high. I'm happy to go along there. And what have we got? At best 24 pips, I'll say 15 to 20 pips. Again, good solid trade, Euro CAD. You know you're okay here because at here it's only done about 15 pips of the day's range. The average daily range is 85, so once it goes through and retests, that's going to go along again, and you've got everything showing that it's going to do that. Are you getting the general idea yet? And this is without our other indicators on here. Pound CAD 15 minutes, a familiar story. Yesterday's high, fails there, tries again there, fails, but look, it's pushing through and it's pushing through. It goes through and retests and goes again. Anywhere around here, we're ready for a long. Yep. Goes through, retests. It's only done about 50 pips of the range then, and the average range is 175. So once it's gone through and retested and everything's green, your TFC clouds, look at the tricks, fantastic. You're going along there. At best 60 pips, so anything up to 60 pips you can take there, because look, fantastic momentum on the tricks. See the angle, steep angle, fast momentum, and up we go. Another good trade. So I think you're getting the general idea. We'll have a look at one more and then you need to start looking for your own. Okay, final one. This is gold at the London Open today, 5 minute. Now 1, 2, 3 up. I love this for a change of trend. 1, 2, 3 up, and as the candles go light green, London Open or Frankfurt Open, somewhere in between, we've got a long, because the wave starts to move up, light green candles, all 4 TFC clouds are green. Let's tick it over one more bar. Trix is a green, fast tricks go through 0, the slow tricks is already through 0. Okay, and there's your textbook trade, and you can go up to yesterday's high. There you go, $3, 30 pips if you like, and it even goes higher than that, $4, but I'd take it to the high. Good trade. Can you see it? Cross tricks above 0, all 4 TFC clouds. You've got your wave starting to move up, you've got your 1, 2, 3 up, you've got your light green candles. Would have been tempting to go there, but you'd have to wait for the break of that anyway, that break of that resistance. So you're going in at either close that candle or somewhere in that candle. So that's how it works. I hope you found that interesting. Surely, I understand that you've got to know price action. I should be doing some videos on price action, because you got to know about yesterday's highs, yesterday's lows, 1, 2, 3 patterns, and basic price action. But when you add the color coded trading that I've got in here with the TFC Trix, the TFC cloud, and the TFC candles and wave, you've got yourself a very straightforward trading system. You know, with all this green, Trix green, cloud green, candles above the wave, light green, at worst you're not going short, are you? Okay, hope you enjoyed that video. That's part 1, 2 and 3 already done. In part 4 I want to talk about the TFC dashboard, which shows the average daily range and quite a lot more goodies as well. Please like the video, share the video. If you're not a subscriber, then please subscribe, tell your friends, and remember, how you do anything is how you do everything. Take care, and I'll see you soon.